Trading doesn't have to be difficult. There's really only two things that you must be able to identify when looking at a stock chart to be able to make money consistently over time. The first thing is momentum. Everybody talks about understanding whether a stock is bearish or bullish, but you have to be able to quantify that. You have to give a value to your trade ideas. So for this idea and for the seconds we will talk about, there are simple indicators we can utilize to do this so that you will always know whether a stock is bullish or bearish. So what I have done here is I have turned on a 200 length simple moving average. What this indicator is doing is it is giving you the average closing price out of the last 200 bars. And you can now see you have a quantifiable, measurable statistic on your chart that shows you whether the stock is bullish in upwards momentum, obviously if we're closing above this 200 SMA line, or if we're bearish, closing below this 200 SMA line. This is how you know whether the stock is currently strong or currently weak. And if I hop over to a chart like Block, you can immediately get an idea of how this can be helpful. When should you be taking longs? When should you be not looking to take longs? What I've done here quickly is built a very simple automated trading strategy. It's going to buy when the current candle closes above the 200 simple moving average. It's going to sell when the current candle crosses below the 200 simple moving average. This is obviously not like a real trade strategy, but just to showcase the usefulness of this indicator. Only using this indicator, looking at SQ here with also my custom backtest labels turned on in our floating P&L, you can see it's profitable. If we hop back over to SPY, the S&P 500 ETF, you can see it's profitable. Once again, this strategy is a little too simple. You probably shouldn't trade just like this, but it just showcases even the usefulness of this one indicator in defining the momentum of a stock and then being able to take advantage of that momentum with entrances and exits. The second idea that you need to be able to quantify in order to make money consistently trading stocks is strength. So when utilizing this 200 simple moving average, we now understand the larger picture momentum of the stock. Large picture strong or weak. But if we can also identify the current strength of the stock and combine that with the larger form momentum, that is going to lead us to building very simple, profitable trading strategies. Once again, to quantify this idea, we are going to make use of one simple indicator, and that is plotted here at the bottom of my chart as the RSI, which stands for Relative Strength Index. Makes sense that it is good for identifying strength of ticker. Now, I'm going to come in and I'm going to make one quick change to the settings of my RSI. I'm simply going to change the overbought level from 70 down to 60 and the oversold level up from 30 to 40. That does nothing to change how the RSI is calculated. You'll notice nothing happened with the actual RSI value, just changes the plot lines to more tighten up what is strong and what is weak. So if you can't tell from that, obviously, if the RSI is above 60, I use that to quantify that the stock is currently strong. If it's below 40, I use that to quantify that the stock is, of course, currently weak. What I've gone ahead and done is I've actually turned on my reversal trading strategy. This strategy scales into positions when the stock is both above its 200 simple moving average, remember, from idea number 1 of this video in determining macro momentum, and then also below 40 on the RSI. So this is buying dips, scaling into dips on strong stocks. And that is just from utilizing the two ideas and the two indicators that you learned in today's video. Stock is strong, stock is dipping, it starts buying. It then also utilizes the RSI as its exit. When the stock bounces back above a certain RSI level, we quantify that as its first signal of strength out of the dip. and we go ahead and exit the position. You can see, obviously, once again on SPY, a profitable strategy. Back over on Square, just kind of the two stocks we've been looking at so far, also a profitable strategy. And look at this strategy, much like the last one we built with the momentum, how on a stock like Square, it is buying the dip, buying the dip, buying the dip. While the stock is strong, it then doesn't touch any of this weakness. Utilizing just these two ideas helps to create trade strategies for you where you will be joining the strength while avoiding all of the weakness. If you're interested in that strategy or in the backtest data study that you've seen showcased in today's video, those two, along with over 80 others, yes, 80 others, are all available for one low price over on my website, daytradingstrategies.net. Link in the description down below. Come check out the site, click on our codes, get signed up, and become a better trader today. So make use of the 200 simple moving average. Make use of the relative strength index. Build strategies around those two concepts. Test them, prove what works best for you, and watch how it changes your trading forever. Like this video if you learned something. Make sure you subscribe if you would like to continue learning. With all that being said, I'll catch you all in the next one.